What is going on, guys? So in today's video, I'm going to tackle a subject that is imperative that you face up to before you even stand a chance of being able to handle your emotions, your psychology, your mindset in the markets. I'm going to use a previous trade example from yesterday. So we're going to start by looking at the charts before moving into understanding the emotional triggers that come up and the underlying root of those problems. So this chart in front of you, this is the trade in question. So I ended up executing two short positions on euro dollar yesterday. Both were big winners, which was amazing. I had an incredibly profitable day. Shared them on Instagram. I'll put a little screenshot so that anyone who wants to think that I didn't take them or took loads of other trades in order to catch them can see for themselves that that is most definitely not the case. And sometimes when you get this sort of flow state with a specific style, to a lot of people, it looks very questionable and they question, well, did this person actually catch this? How many trades did they take in order to catch this one specific move? And you can see actually there's a lot of method behind the madness, and you can in fact do this consistently and repeat this and not have to take everything, which is what I typically see from these traders who are posting lots and lots of big profit results. Obviously not including profit, as that's absolutely none of your fucking business, but you can see the proof that these were the only two trades that I took this day. It splits up into four because I take partials. I've removed some of the analysis on this as the technicals aren't important. This isn't why I'm covering this position. So let's dive down to those lower time frames. As I said, entry is not important. Take profits are not important. That's not what I'm talking about. So posted up on Instagram, got a DM back from someone, executed exactly the same trade from exactly the same position. However, he ended up closing this position out when price started to pull back and closed this out for 0.5% instead of allowing it to play out. I'm not exactly sure where he would have been targeting, maybe the same as me, maybe equilibrium of this leg. But wherever it was, he would have been able to bank 4%, 5%, 6% profit if he allowed this to play out. So I want to talk about the sort of psychology triggers that made this trader close this position down. Obviously not going to mention names, not going to share the message or anything. This is completely anonymous, but I thought it was a great lesson. I shared my perspective with him, and I thought it'd be great for other people to hear it as well, as we can talk about the emotional triggers, but we can also dive into that underlying root issue that I personally see to why he closed this down and why he had all these emotional triggers come up. And I'm sure a lot of you will be able to relate and take something away from this video. So with this style of trading, it's not important whether you know it or not. I just want to explain this from a perspective of someone who has clarity of how to trade this. You can apply that to your own strategies, your own style, etc., as you have a great understanding of that, so it's all relevant. So we entered into this position. It moved very nicely in our direction, 2.5%, 3% profit. And then it started to pull back against us. As it starts to pull back, the trader ended up closing this out at 0.5% of a win. And then he ended up losing out on the large amount of momentum that ended up kicking in and pushing it to where I was looking to take my first profits off of the table. If you have deep clarity of this style, you will see this chart. And for anyone who does, I'm sure there's a lot of you out there, you will see this chart. And this was actually an area where this trader closed us down. This was actually an area where I was personally looking for potentially scaling into the position with this continuation play. So anyone who knows the style, this region here is very much an area where we can have that expectation of markets pulling back to before that strong momentum comes in, because you'll see exactly what I'm seeing. You'll have that same perspective, but this is relevant to anyone's style. When you see a pullback, you should know what invalidates your trade. This, when price does this isn't invalidating our trade, so why would we close this down? So the emotional triggers that will have come up, as soon as we got money running and we're nicely in profit, our mind wants to protect ourselves. So as soon as we start seeing that profit dwindling away and we start acting from this kind of fear-based, confused state, we'll start to get that very natural feeling in our head from our ancestral mind and that chimp on our shoulder, which will tell us, protect ourselves, take our profit. It protects us and it protects our capital. It allows us to bank a winner. It allows us to be right, and it protects our ego because we can still pull a win from the market. So the case in point with this trade example, before we start moving on to those psychological triggers, is there was no reason that this trade was invalidated. And it's so important to have clarity of your style and have expectation of what the markets can do and know when your trade is invalidated. So this doesn't invalidate our trade. We can easily remove risk to break even, which is what I did. But there was no reason to cut this short because we're very much protected by this region over here. If you know the style, you'll understand that. So before I dive into some of the emotional triggers that would have been set off and also the cognitive distortions that would have arisen, I wanted to just cover a quick concept. Most self-aware people will already be very observant of this. However, I just thought I'd introduce the concept for anyone who hasn't really thought about it or related it to their trading at all, their trading performance. So when you self-observe and you listen to the voices that come in your head, you'll be very aware that there isn't just one voice, there's multiple voices. So within your brain, you are essentially managing a community and you are the CEO, you are the boss. So it's your job to filter out those different voices that arise, different emotions that arise, and understand and filter which ones serve you positively and which one serves you negatively. So some of the cognitive distortions that will have arisen in this trader, and I'm sure everyone can relate to these different feelings, are going to be emotional reasoning. So saying to yourself where you hear it and you're saying, I feel it, so it must be true. Overgeneralization, so assuming a rule from a previous experience. Filtering, so focusing on negative and ignoring all the positives, and also catastrophizing. So I see a lot of people live in this space where they expect worst case scenarios. Very negative mindset to be living in. Diving into those a little bit deeper and relating them to trading and this specific example. So filtering is the trap of dwelling on a single negative aspect of a situation. So in these scenarios, when we're executing a trade, we've built up however many confluences you needed. We have a structure, we have a process, we have a plan. And there isn't just one reason why we executed the trade. There is many that have built this whole thesis of your trade idea. As soon as money's on the line, if we don't have an expectation that at some point price can still pull back against us and then continue, if we're not expecting that, when it does occur, we'll start to get these emotions arise and we're going to focus completely on that one negative, overriding massively that underlying 12 reasons or however many confluences you may have, those underlying reasons of why you took the trade in the first place. So we need to remember in that situation where a negative does occur and these emotions and that voice starts speaking to you, you need to know how to filter that out, ground yourself, and remember there are multiple reasons why you took this trade, and one negative shouldn't offset all those positive reasons. Emotional reasoning. So this is the distortion of thinking that if we feel a certain way and we have specific thoughts, then they must be true. So this is where, in this case of a pullback scenario, this is where that inner chimp that wants to protect you, your ancestral mind that wants to protect your ego, yourself, and also your capital, that's when it arises and starts speaking negatively about the situation. It's your natural response to have that. It's very normal. This comes back to that inner community within your brain, these different voices that speak to you, and it's your job to filter out and understand. Listen to them, because they're never going to disappear. They will always be there. They will reduce, but they will always be there. It's not about stopping them, but you need to learn how to filter when these voices start speaking to you and understand, okay, is this something that I believe is true, or is this just my ancestral brain trying to protect me from a negative outcome? So we need to remember our emotions are not always indicative of objective truth, and we need to look past how we just feel. Overgeneralization, this is taking on a previous experience or situation and using it as a sole piece of evidence for a broad conclusion. So in the scenario of a pullback, I'm sure we've all been through these situations multiple times. We know what would invalidate our trade, so we trail our stop down to it. And as we know, we can't win all the time. So there's going to be a scenario in the last month where you've done this exact thing. It's going to be very specific to the situation you're in now, and it's gone against you. It's been a negative outcome, but you followed your plan. So now you're kind of ingrained with, well, if this happens again like it did 3 weeks ago, then the same scenario is going to play out. And this isn't the case at all, because we need to remember every moment in the market is unique. We have an edge, and we should have clarity on exactly how we manage a position when we're in it, not only just how we execute it. And we need to know where our stop loss is going to be, and we need to know where our take profit is going to be, because executing a trade is only a very small portion of being a consistently profitable trader. Catastrophizing, this is the expectation that the worst will happen, usually based off of previous experience. So very, very similar to overgeneralization. And as I touched on, I see a lot of people living in this space, And this is all about really grounding yourself and understanding, okay, what's the worst that can happen? If I follow my plan, what's the worst that can happen? In the case of this example, you would have had a break-even trade because you could put your stop at break-even and protect yourself. So that's the worst case scenario. Is that bad? What's worse, not following your plan? And yes, you had a 0.5% win, but you've now lost out on another 4.5-5% profit, and that's emotional baggage that you're going to carry from now on. What's worse, that or following your plan and taking a break even? All of this in this specific scenario, my point of view and perspective is this is a lack of clarity. This is not truly understanding the technicals, not having an understanding and expectation of what the markets can do and at what part your trade is invalidated, because that's all we care about, and that's what your trading plan should show you. And this is why it's so important to have that clarity, is creating the path of least resistance to making the right decisions. And this is something that I see lacking in so many traders, is they don't know what the right decision is because they haven't put the time into truly understanding the technicals. If you don't know what the right answer is, the correct decision to make in specific scenarios or every scenario, then how are you ever going to even start to tackle your psychology issues? So this is the underlying issue that I see the majority of people have, is not having that true clarity. And this is why so many emotional triggers come up. This is why they respond to those triggers and they don't even know how to make those correct decisions. So how would they even go about managing their psychology when they don't have that strong technical understanding? A lot of content that I've watched, they seem to separate psychology and then the technical side, but they're not. They're very much intertwined. So how do we go about improving that clarity from a technical perspective? So this is going to be where we're absorbing content, we're looking at people who are mentoring, and we're starting to understand how they approach the market, what they look for, because that will give us that sort of base foundation. It's going to include testing, so back testing and forward testing of different styles, different strategies, and that's going to give us a huge amount of experience and knowledge within the markets to understand for ourselves, not just listening to other people speak about it. Then we're going to have to focus on journaling, so making sure that we're recording our wins, recording our losses. I also do a mindset journal, so throughout the day, as I'm waiting for a position, I'll write down what I'm waiting for and how I feel about it and what I need to see. And when I'm in a trade, I'll write down what would invalidate a trade, where am I going to trail my stop to and why. Because this is so important, and it's something which I don't know how many other traders do, is journaling those thoughts before a trade and whilst you're in a trade. Otherwise, when you do your review and you look back on that specific situation, you won't have the answers of why you made specific actions. And if you can't measure those actions and understand why you did them, you're never going to be able to change them. So this is something that I'm definitely going to be talking about more, is this mindset journaling throughout the day, so that you can actually understand where your perspective was before you're in a trade, whilst you're in a trade, not just after a trade, which is when most people are journaling. And then you need to be reviewing that journal in order to take lessons from it, to get that understanding, to expose patterns in your psychological flaws, in your technical flaws. And this is what's all going to bring that clarity. Underlying all of this is that you need to be present whilst you are doing this. So it's not a process of just going through the actions. I see this with a lot of people who build huge amounts of data from back testing and forward testing. They're not really present whilst they're doing it, so they're not absorbing what's in front of them. They're not absorbing the information. And this is potentially where a huge amount of people struggle with the emotions when they're actually in a trade, because they don't really pay attention whilst they're back testing, whilst they're forward testing. They don't really pay attention to the movements whilst they're actually in that trade. All they're really caring about is that first initial execution of it. So being present is a huge thing. This is just a little bonus tip for anyone who trades a similar style to me. So I went through a transition phase of starting off with 2 pairs and then moving to 4. And then now I actually only trade 1 pair, euro dollar. I'm not going to talk about the reasons behind why euro dollar, but this allowed me to gain so much more clarity so much quicker. When you're looking at 4 different pairs, you're overwhelmed with information and you're not paying attention to the actual moves of that currency pair. You're just looking for opportunity. That's all you're doing. You're searching and you're focused on looking for opportunity versus growing and understanding more and looking for development and understanding what happens when you're in a trade. So in order to be present, I would definitely recommend people who trade the style to start off with 1 pair. You think you'd be getting more exposure by looking at multiple pairs, but the problem is you're so focused on just looking at opportunities on both pairs that you're never really present and paying attention to the things that are happening on that chart. When you step back and you're just viewing one, it allows you to have that laser focus. It allows you to really concentrate where the market moves, when the market moves, and why it moves, and where it's likely to go to and from. I hope this video provided a ton of value for all of you out there. I'm sure a lot of you can relate to not only the emotional triggers that I've covered in this video, but the main takeaway is before you even have a chance at handling your psychology in the markets, you have to have extreme clarity on how you approach it. So that's going to wrap today's video up. If you can relate to this in any way, make sure to drop a comment below, also a like button, and make sure you're subscribed as always. But for now, peace out.
I pull up you deep on my dick, consider it's pivotal. Trap through the app, make her clap it, don't cap it, she tapping it fast. I think that you know they be catching it.